There's a free TradingView indicator that claims to predict market bottoms with insane accuracy. But does it actually work in real trading? In this video, let's put it to the test. Recently, I've seen quite a few videos claiming that this free indicator can detect market bottoms with almost full accuracy. Sounds too good to be true, right? Well, today we are going to find out. So let's take a look. This is what the indicator looks like on the chart. Every time you see a green histogram bar appear, it's signaling that the current price could be forming a bottom and that the reversal might be just around the corner. Take this example. We are looking at a clear downtrend and then, boom, a green bar appears. A few candles later, the market reverses and pushes higher. The same thing happens here on Bitcoin. Price dips, the indicator flashes green and a clean bullish move follows. If we had taken a buy position at that moment, it would have resulted in a solid profit. So, what's this magic indicator? It's called the Williams Vix Fix and you can find it for free on TradingView. Simply search for CM Williams Vix Fix finds market bottoms and it's the one created by Chris Moody. Once added to your chart, you will see something like this. Now, according to the creator, this indicator works best on higher time frames, like the 4-hour or the daily. In our case, we'll be using the 4-hour time frame to keep things simple and still get plenty of signals. Now, how exactly does this indicator work? It's simple. The VIX Fix is designed to detect market bottoms by analyzing volatility spikes. During market bottoms, volatility tends to spike sharply because of panic, stop hunts or capitulation. So, the indicator checks recent price behavior and flags any period that resembles a volatility spike. Theoretically speaking, it tracks how far the current low price is from the recent highs and uses that to simulate a kind of fear index, similar to the real VIX on S&P 500. When it detects that the current price is overextended to the downside with high volatility, it flashes a green bar, which is the signal we are focusing on. But here's the catch. While it can identify market bottoms very precisely in some cases, there are also moments when it gives multiple signals in a row or flashes green too early. So how do we know which signal to trust? That's where the second indicator comes in, the Stochastic Oscillator. We are going to pair the VIX Fix with the Stochastic Oscillator, which is also available for free on TradingView. The default settings are 14, 1 and 3, but based on community recommendations, we'll change the inputs to 5, 3 and 3 for more accurate confirmation. Now here's the strategy. First, we check the Stochastic Oscillator. Both lines, the blue K and the orange D, need to be below the oversold level, which is by default the 20 line. Second, we wait for the blue K line to cross above the orange D line. This signals a possible shift in momentum. And third, at that exact same moment when the crossover happens, we want the Williams Vix Fix to print a green histogram bar. That means volatility has spiked and the market might be forming a bottom. If all these conditions are confirmed when the candle closes, then we enter a buy position on the next candle. The stop loss is placed slightly below the most recent swing low and the take profit is set at 2 times the stop loss distance, giving us a clean 1-to-2 risk-to-reward ratio. Now, for those of you using the free version of TradingView, or if you are just starting out and don't want to cover your chart with too many indicators, I've got something that will make your life a whole lot easier. I've created a custom script that combines everything we have just covered into a single indicator. It includes both the Williams Vix Fix and the Stochastic Oscillator, and the best part, it automatically detects the buy signals based on our strategy, plotting those entries directly on your chart. And no, there is no catch. For you, it's absolutely free. All you need to do is to join my free Discord community using the link in the description. Once inside, head over to the free materials channel and you will find the full Pine script code there. Open up the node, copy the code, and then on TradingView, click on the Pine editor, then on this arrow, create new, indicator, paste the code and save it. Finally, click on the add to chart option and that's it. You are now running a full strategy on your chart without having to add multiple indicators manually. Now, just so you know, this indicator works with any asset and any time frame, and you can easily adjust all the settings right from the indicator's input menu. And if you want to set up alerts, you can do that too. Simply click the alert icon on TradingView, choose the custom ATP indicator and select the alert condition. Done. Okay, now comes the fun part, putting this strategy to the ultimate test. To do that, I'm using my custom automation tool, the Indicators Testing Bot. This tool analyzes the results of thousands of trades in just seconds and even lets you automate your trading completely. If it is your first time hearing about it or if you want to learn exactly how it works, I've put together a complete user guide that shows you everything this tool can do. You can download it for free on my website. Just go to algotradepro.com, click the little arrow on the home page and you will instantly get access to the full guide. Now, after setting up our entry conditions and risk management rules inside the bot, you will see that it quickly marks each trade on the chart with clear entry points, take profits and stop losses, exactly as we defined. So let's test it across multiple markets and see how it performs over a long time frame, 10 years of data, from 2015 to 2024. Let's kick things off with Bitcoin on the 4-hour time frame, and immediately you will notice something peculiar. The strategy does produce profits, but doesn't have a high win rate. We are looking at around 40% win rate, which is far below expectations and significantly worse than a simple buy and hold approach. If we switch to Ethereum, our data only goes back to 2020, but again, the strategy is profitable and this time with around a 44% win rate. Moving to the daily time frame give us slightly better results, improving our win rate to around 75%, which is excellent. But even here, the buy and hold equity still outperforms the strategy. Next, let's see how it does in Forex, starting with EURUSD on the 4-hour chart. Sadly, here the results are poor, with only around 32% accuracy and a negative return of roughly 30%. The same thing happens with GBP USD. The strategy simply doesn't hold up well. Next, let's quickly check gold, which usually trends upwards over time. On the 4-hour chart, the strategy again produces profits, but the win rate is still under 40%. Switching to the daily time frame does increase the win rate slightly, bringing it closer to 50%. But again, the buy and hold equity remains superior. Finally, in the stock market, results vary significantly by stock, with an average win rate of around 40%. Some stocks yield profits, other losses, making it a fairly inconsistent strategy for this asset class as well. Overall, while profitable in some scenarios, this strategy clearly doesn't achieve the nearly 100% win rate advertised. So what's the main issue? The problem is that this strategy often signals long positions during strong downtrends, and trading against the overall market direction is not a good idea. Usually, we want our trades to align with the major market trend. And so, I've got a simple tip for you that can greatly improve this strategy, adding a moving average baseline. Let me show you exactly how that works. So, for this improvement, I'm going to use a weighted moving average. For those unfamiliar, this type of moving average gives more weight to recent price action compared to older candles, which helps it respond faster to market shifts. I will be using a 100 period weighted moving average to define the overall market direction. And here's the new condition. In addition to the rules we already defined, we now want the price to be above the 100 period weighted moving average at the time of the signal. This way, we only take trades in the direction of the overall trend. Any signals that appear below that line will be dismissed. Now, if you want to include this new condition in the custom indicator I shared earlier, here's how to do it. First, add a weighted moving average to your chart. Then, click on the source code icon. It will open a simple script. Copy the lines 3 to 7 because that's the core weighted moving average logic. Then, open the ATP custom indicator, and just before the long condition section, paste the weighted moving average code. To keep things clean, you can label it as / weighted moving average indicator. You can also remove the offset input, we won't need it. On the plot line, replace offset with overlay equals true to draw the weighted moving average on your chart. Now you can group the weighted moving average inputs, just like the ones for the VIX Fix or Stochastic. Then set the default period to 100. And finally, in your long entry condition, add and close above out, where out refers to the weighted moving average line defined earlier in the code. This will ensure the candle is closing above the weighted moving average before a trade is taken. Once you hit save, your indicator will be updated, and now it shows both the entry signals and the weighted moving average line on your chart. All buy signals will only appear when the candle is above the moving average. Now let's look at how this small change actually improves performance. In our first backtest, Bitcoin on the 4-hour time frame had a win rate around 40%. With this new condition added, the win rate jumps to over 50%. Next, let's look at EURUSD. Previously, the strategy produced a 30% loss, but with this trend filter in place, the equity curve flips, and now we are looking at a 14% profit instead. Of course, I'm not saying this is the ultimate strategy or that you should blindly follow it. What I'm saying is, adding a trend filter like the weighted moving average significantly improves this system's performance. From here, it's really up to you to take this framework and test it on your chosen assets and timeframes, and see if it is something you could use to diversify your trading portfolio. If you want to test strategies like this one automatically, saving hours of manual work and getting precise results in seconds, try out the indicators testing bot available on my website. The link is in the description below. And that's it. I hope this helped you learn something new. Thanks so much for watching, and I will see you in the next one. Bye bye.